Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me on set, we have Chris Burbeck. He's a co-founder and partner of Fundamental Income, and we're here to review the REIT sector and a new index launched on Nasdaq. Thank you so much for joining us at MarketSite. Now you have a really interesting background. You come from industry. So let's learn more about that and your outlook on the REIT space.
Yeah, absolutely. Thanks, Jill. I spent over a decade in two Net-Lease REITs and recently left to start Fundamental Income. And part of it was born out of the evolution of what's happened in REITs. So asking what is happening in REITs is becoming a bigger and bigger question over time because of the evolution of the different property types that are out there. So most of what people are concerned about and thinking about today are topics of directionally what's happening with rents in different sectors, and people still think about real estate when it comes to big four categories like office or retail or residential or industrial, and so when you hear people talk about it, it's mostly around what's happening in office, how's job growth, directionally what's going to happen with rents, is it going to be absorbed, is there enough space that's going to get absorbed. When you think about retail, obviously it's a popular topic for conversation and the shift towards online shopping and what that means for retail real estate, but also industrial. But there's it's a popular space, and so how much construction activity has been happening in that space. And then in residential, there's this shift towards renting. When you think about millennials or seniors and they're choosing to rent rather than own, that's good for the multifamily people. That being said, our income's keeping up with the pace of the amount of rents that, and can they continue to go up the way that they have. Fortunately for us, my background is in Net-Lease, and it's a sector that there's a lot less to worry about than those sectors, and it's primarily because of the fact that with Net-Lease, you're taking a property. You can think of your neighborhood pharmacy or a local restaurant. A lot of these properties are owned by REITs that are public, and they're leased to the companies over long periods of time. And so you have leases that are typically 10 plus years in length. The rent escalators or the rent increases rather 2%, so contractually the rent has to go up, and the tenants are generally responsible for all the property expenses. And so when you think about what that translates into for investors, it's a really consistent stream of cash flow and a great investment, especially in today's environment where there's just this increasingly enhanced demand for yield.
So the new REIT index is going to be Net-Lease exclusively to
yes,
that property type.
Yes, exactly.
All right, and you had mentioned it's a great tool to generate income and provide growth because you can kind of forecast what your return could potentially be. So you don't necessarily think of REITs as an economic indicator, but they really are. They cross multiple sectors, and I find that to be really interesting.
Yeah, they're when you look at on the margin, a lot of these REITs that when their leases roll over year in and year out, it is a great economic indicator. In the net lease space, it tends to be a little bit more stable. And when we talk about income and growth, having a really predictable stream of cash flow that's being used to pay out dividends and having a portion of it retained to reinvest in new assets, and then lastly, when you think about the size of the market, so net lease is just a translation for corporate real estate. And over the last 20 years, there's been this shift from operating businesses owning their real estate to wanting to lease it, and in what's known as a sale leaseback or new development. And what's exciting about net lease, the cash flow is fairly boring because nothing happens to it, but the size of the growth really comes from the fact that there's still $3 trillion of real estate on operating businesses' balance sheets, and that's just gradually making its way into the institutional space. So you have this sector that has really consistent stream of cash flow with a massive growth opportunity in front of it.
All right.
That's what we're excited about.
And to wrap up here, why partner with Nasdaq Indexing?
Well, we're setting out to change how people think about real estate. We're focusing on a business model rather than a property type. We're not interested in office or retail or anything else. And so we're doing something that's innovative. And Nasdaq's a innovative partner, and it has a reputation in the market for being innovative. And we wanted to partner with the best in the business, and hence we chose Nasdaq for our calculation agent.
All right, well, welcome to the Nasdaq family. Thank you so much, Chris,
Thank
for
you.
joining us
Appreciate
at
it.
MarketSite. And thank you for joining me. I'm Jill